So yesterday we had another strong sell-off in this area we've identified over the last month or so. It's actually looking at the SPY trades for the last month, and hit rate's really good. It's like around 80%. So if you haven't been taking any SPY trades, it's probably worth taking a look at it. And unless you're just crushing it so much and you have no extra time for new sorts of trade setups. Of course, it's not the same setup every time in the SPYs. It's different, but it is extremely liquid, and we are just seeing really good on the reward side. And when something's liquid, obviously the risk is low. So here's the bigger picture. I wasn't around at the end of the day, but it did touch 276 where it broke out from a few days ago. So certainly, if you're around, it's a buy there. The only thing was it was end of the day, so if you don't want to carry a swing position, you probably would have had to sell most of it into whatever the pop was. But we've now had the beginning of the first big sell-off from there. We didn't quite get to 280 for this large sell-off, but it was 279-ish. We've been targeting the 278 to 280 area. So just the way this came off from the top originally. And so now the cool thing is we're gapping up right towards the bottom of this little failure range that I highlighted. Yeah. So we can see this morning, did we get above this 278 and fail again?
ASPS, all these.
Perhaps push down to 276 again. I wouldn't really feel too negative about the market unless we got below here. Kind of where the breakout started from a few days ago. Got above 274.30. Went straight up to 278. If we got some closes down in this area here, I would start to think, all right, this is not as strong as I suspected. But as long as we stay above, more preferably 276, but as long as we're above here, I'm not going to really think too much of this. The market went up a lot last year. You can have long periods of consolidation. So one thing that's always, though, in the back of my mind is the cost of the tax cut. It was an upward shift probably in earnings. I think I read 8% for the S&P. So right off the bat, that gives us some good upside for the year because of the tax cut. Let's say if earnings were up 5% anyway, regardless, tax cut 13%. So you're looking at somewhere between maybe a 10 to 15% move in the market this year to the upside when something dramatically changes. Real tight range in the pre-market. That's kind of weird looking, isn't it? Yeah, so just looking at the big bid down move at midday, we got to 277 and a quarter-ish. We did bounce back. Ooh, look, where did we fail? Probably going to do a webinar on the SPYs in the next month or so, just to talk about the SPY trades. So it had the big move. It popped back up to an area where at the time what the final down leg was from, it failed there and had the real final down leg to the 276 breakout area. So you have basically 278 to 278.50 as a spot for it to potentially fail this morning. IWM is still real strong. We're developing a pretty tight consolidation range against 160. Yeah. What's the deal? There's a lot of this yesterday. You can see this is pretty vicious. This up and down. I would say 158.60 to 158.35 is kind of, that's an area you want to look be a buyer. We'll see how much longer it continues. 160 is the 280, I guess. 160 in IWM is the equivalent of the 280 in the SPYs right now. Let's take a quick look at Qs, because Qs, a lot of those tech stocks were overbought, and it finally had a pullback. You know, the moves, I mean, the move obviously in Netflix has been absurd lately. NVIDIA is always going up. Okay, so the Qs did make a new high, unlike the SPYs. Pulled back at a little bit of a retest yesterday. So this accelerated, came back to the trend, and did a retest of this. Actually, looks like on the day we bottomed, it gapped below that, and then got it right back above. So this looks like a, you know, we'll see. As long as it stays above 170. Probably more like 171. As long as it's consolidating above this area right here, buyers firmly in control. Below 170, though, we can start to play for moves, pull-ins to 68. This area here. All right, a couple of things in play. SIG. So SIG is just a disaster. It's already bounced a little bit. So let's look at the daily. I look at that. They lowered guides 30% for next year on the earnings side. Same-store sales down. They raised their dividend. It's basically erased the move, the up move of the last 5 years. And it already erased that move. Now it's going further. So it's kind of back inside of this consolidation area from back between 2011 and late 2012. Question I ask myself, I don't know anything about jewelry, but you always hear millennials aren't buying rings and diamond rings and things like that, and they care more about experiences and things like that, and they're shifting into the age group that spends the most money on things, and if there are things they're paying for are experiences and not objects, it's a big deal. So, bigger picture. But the company, of course, says they can fix their problems. So, so it was down at 45, 46. They just kept on selling. It did bounce here from 42.5, clearly. On the sheet, I put 47 as the first real resistance, because that's where it is on the daily. You know, looking at the pre-market, I thought 44 to 45, but you got it. This is a pretty wild stock, so you got to be careful with it. It did look like they sprayed it. It's on the conference call, I guess. That's why they sprayed it up to 44.70, but it's going right back down. I guess the way I would look at it is, does it hold the pre-market low again? If it doesn't, you start to think, I don't know if it's going to get all the way to 40 today, but you play it for at least a down move to 41, 41.5. It comes back up. I would see if this 44 area, if they're selling it at 44, maybe it spikes a little bit above it and comes back below, play for the short there. Right on the open, if the first move is straight up and it has a shallow pull-in, then I would switch my bias to long back up to that 47 resistance. But right now, my first inclination is to look for the short side. CNX. So not too much in play today, so I put this one on here on the upgrade. Originally, when I was reading about the tariffs, it looked like tariffs could have a much bigger positive impact on the aluminum side of the business versus the steel. I guess we've kind of seen that play out a little bit with X going right back down to $40. So let's see if this is, you know, they upgraded it. We already know that it already had a big move from 13 to 25, say 24.70, double topped. So I did put 23 and 24 on the sheet. Let's zoom in and see if we can come up with a trade plan. First of all, yesterday the price action was kind of wild. Went up, did a retest of 22, made a new high, did a retest of 22, made a lower high, went through the 22, went up again, and then they crushed it. So it's, I don't know, it's confused people in the stock. I guess the day before it did same bullshit, but it's making higher prices. This is the area here I would expect buyers to step in if they believe this upgrade. Yeah, normally does 3 million shares, so could easily do 4 or 5 million shares today. I'll give it a shot right here in front of 22. It's hit. All right, MU. Why didn't I put a support level there? So MU turned out to be really good on the short side yesterday. I was just looking for a $2, $3 pullback. It ended up coming off for 4.5, and then all the way in the after was 58. This is, so I just want to explain a difference here. A lot of people made money on this yesterday on the desk on the short side. It was overbought. That's why I put it on the sheet as the only really secondary technical play that had gone vertical. There's a difference though. I already explained this a little bit yesterday, but it's an important point. That's why I'm making it again. Like there's a difference between something like this and like some random $2 stock that goes to 5 and then back to 2 and then 0. This is a real stock with real earnings, and it could easily go to $70, $80 in the next 6 months, 12 months. So when this trend accelerates, no different than the SPYs or anything else, there's usually reasons for that. In this case, their earnings guidance keeps on going higher. And it'll come down for a day or 2 days or 3, whatever. But then there's a trade to be made, catching it, support, maybe it consolidates for a couple of days in here, and then it breaks to the upside and goes up again. And to give you an example of how powerful these up moves are, it broke out above $50 like a week ago, and it went to 63 where we were shorting it. So this is a lot bigger than this. And so there's actually more money to be made in the long run on this on the long side. So I just wanted to point that out. So, okay, so it looks in the after hours, it came back down to this area here where the prior day it had started its second leg up. The way I'm looking at it is that 60.80, and then it's like the 61.30s here where it kind of failed, got above it, and they crushed it. Those are the two spots for me where I would look to see if it fails in those areas. It would be great if it consolidated for a couple of days between 58 and 61.5. And then we played the next larger move in the stock. In the meantime, it was a really good trading stock yesterday. Let's not kid ourselves. The beginning we got in, I think I pretty much called it out in real time when this had this red bar here down to 62.30-ish or something. Was short against 62.5. And then boom, it dropped a couple of bucks. You can barely see the pop back up, but it did pop up 70, 80 cents from there and went boom again. And this is a pretty good retracement. I'm sure people were looking to short it at 61.30 here. Here is the shakeout. It got back down below it. The retest of the low. So this 59.50 is also interesting to me. 59.50 to 59.25. See if it supports here. You could end up getting support here and then move to here or here. So sure, I'll take a look at VIX for you because it did have a very strong move. It shows you like yesterday was such a good day in terms of the opportunity. VIX made a strong move off 30 to 33. So the reason I didn't put it on the sheet was I just thought this pretty much, it already had the best case. It bounced from $30, went back up pretty much to where it failed the prior day. It was so strong you could look, for a retest of the area where it failed about a month ago here. But the risk reward down at 30, obviously, that's why, we had that as an important level. It got below it right on the open, it got back above it, then it got above our first support one, which was, 30.80, I think, which was this level. And then from there, went up another $2. So the way I would look at it is, shorting in that area here. If they flushed it down to like 32.25 or something, maybe look for a buy right here. But not nearly, there's probably 1 or 2 trades there, just not the type of risk reward as yesterday. Qualcomm, right? So Qualcomm, So it went to R2. I got a little bit aggressive shorting in it. I was concerned it wasn't going to actually get above the spike level from the pre-market, so I was shorting it pretty aggressively here, which made it difficult to make money in terms of, yeah, I did see it fail up here, and I did call it out when it got back below 61. And it did come off a dot, I think let's go to the 5 minutes so we can see this a little bit better. So I thought, when it made the new high and then quickly got hit here, I think this is a pretty good entry on the short below 61. I covered everything into that. I don't remember. I didn't get long. I covered into the 60.20, like a little bit of dollar and change off the high. I had an alert at 60, but I couldn't get long. It popped back up 75 cents, and then started to act like a better short after it started to hold below 60.20, which is where I covered the first time. And you can see they started to actually sell it there, and they sold it a little bit lower. They were supporting it though, around 59.90. This bar led to the retest of 60 and then the down move. So it was pretty good. I mean, I think on the 30-minute probably shows it even more clearly. So you had to weather the storm here in the first 10, 15 minutes, especially this last wick here. And then a reverse. So, I was looking for it to be a good short. Obviously, when it overshot to the upside by about 75 cents above where I thought it could get. Looking at it this morning, it was already at 60. So I think this is the spot, 60.20. What did I put on the sheet? 60.15. So 60.15. These are the two areas right here for a play down to 59, and then you kind of see consolidation above 60.50. You certainly could look at it on the long side. X I put on here because it's right down to $40, and pretty much erased most of this move here. So it started around 39.50. And geez, it's nasty. You got to figure all the people who are buying up in this area here, almost all of them are out. So maybe like a flush on the open and a move back up to like 41.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.